Hi everyone, welcome back to the channel. You've probably seen the classic Bitcoin versus gold charts 1,000 times by now. People love to compare digital gold with physical gold. But almost nobody talks about Ethereum versus silver, and I think that's a really interesting and underexplored relationship. So in this video, I'm going to walk you through a full breakdown of the ETH versus silver chart, both on the weekly and on the daily time frames. We'll talk about what the RSI is telling us, how past cycles behaved, what the ETH to silver ratio could be signaling for ETH in USD terms, and some potential price ranges if certain patterns repeat. As always, this is not financial advice, just my personal analysis for educational purposes. Use it as one input among many in your own research. Let's dive in. First of all, let me set the stage clearly. What we're looking at here is the weekly ETH to silver chart. That means we're not looking at ETH versus the US dollar, and we're not looking at silver versus the US dollar. We're looking at how Ethereum performs relative to silver over time. In other words, how many units of silver 1 unit of ETH is worth, and how that ratio moves across cycles. Below the price, I've added the RSI, the Relative Strength Index, on the weekly time frame. RSI is a momentum indicator that helps us see when something is extremely overbought or extremely oversold. On this chart, there were only 4 times in visible chart history when the weekly RSI for the ETH to silver ratio went below 30, which is the classic extremely oversold level. And right now, we are witnessing the 5th occurrence. That alone already makes this a very interesting moment, because these events do not happen often. To make those moments obvious, I've marked them with green vertical dashed lines. Each of those marks shows a time when the ETH to silver RSI went under 30. Historically, those points have tended to line up with major bottoms in the ratio, followed by extended periods where ETH outperforms silver. Let's talk about what happened after those previous RSI below 30 events. If we assume that the recent week's low was indeed a bottom in the ETH to silver ratio, we can look back at how long past outperformance and underperformance periods have lasted. Looking at the historical data. 1. The longest period of ETH outperformance versus silver after an oversold RSI event was 152 weeks. 2. The shortest period was 19 weeks. 3. The average period of outperformance across these events was around 79 weeks. On the flip side, when ETH underperformed silver, 1. The longest period of underperformance was 56 weeks. 2. The shortest was 22 weeks. 3. The average underperformance period was about 39 weeks. So what does that mean in practical terms? It means that when this ratio becomes extremely oversold on the weekly RSI, we often see a shift in trend where ETH tends to outperform silver for quite a while afterward, not just a quick bounce, but potentially many months or even more than a year on average. That doesn't guarantee the future, but it gives us a historical framework. If this 5th occurrence plays out in a similar fashion, there is a case to be made that we could be entering a new phase of ETH strength relative to silver. Now let's zoom out and look at the bigger structural picture. Since the top in November 2021, the ETH to silver ratio has essentially been in a downtrend. On the chart, this shows up as a series of lower highs, with price respecting a downward sloping trend line. One key level that stands out is the 49 area on the ratio. For a long time, that 49 zone acted as a strong support level. The ratio repeatedly found buyers there, and it held for quite a while. But recently, in December 2025, that support finally broke. Breaking a long-held support like that is a significant event. It often flushes out a lot of late longs and pushes sentiment to extremes. Combined with the RSI dipping below 30, it paints a picture of capitulation and extreme pessimism on the ETH to silver pair. On the chart, I've also added 2 important duration markers. The green duration line measures the time from the very first RSI below 30 event in a cycle up to the all-time high in the ETH to silver ratio. The red duration line measures the time from that all-time high down to where we are now. These duration markers help visualize how long it took the ratio to go from extreme weakness to peak strength, and then how long it spent unwinding that move. That sequence, from oversold to peak to retrace, is what we're trying to understand and potentially compare to the current situation. Now let me be very clear. The next part of this analysis rests on a huge assumption. The key assumption is that we are currently witnessing a macro bottom in the ETH to silver ratio. If that assumption holds, then history suggests we might see another extended phase where ETH outperforms silver. To get a sense of what that might look like, I've superimposed the bar patterns from the previous major upcycle, specifically from November 2016 to November 2021, onto the current chart. What really caught my attention was how well those historical bar patterns line up with the current support and resistance levels on the chart. Even though it's obviously not exact, the way price respects the overall price structures, such as prior support and resistance zones, is quite striking. When we zoom in, the projection suggests a couple of things. First, the ETH to silver ratio might initially struggle to reclaim the 49 level, which used to be a strong support and could now act as resistance. Second, it could take multiple attempts for the ratio to break above the long-term downtrend line. Third, there's a key level around 80, which lines up with the VPVR point of control. In this projected path, that 80 area acts as support, holding price before the downtrend line is finally broken. Again, it's very unlikely that history repeats perfectly bar for bar. But if it does rhyme, this structure gives us a potential roadmap of how the ratio might behave as it tries to turn the corner from a macro bottom. Let's talk about what happens if this pattern continues to play out. In the projection, the ETH to silver ratio could revisit the long-term trend line around August, and at that point the ratio would be somewhere around 98. Remember, this is the ETH to silver ratio, so to translate that into a potential ETH price in US dollars, we need to make an assumption about where silver might be trading around August 2026. Here's where silver itself becomes interesting. The weekly RSI for silver has recently pushed above 90, which is an extremely overbought reading historically. When you see an RSI that high, it often signals a blow-off top or at least a very stretched move. This setup looks somewhat similar to what we saw around April 2011 in silver, which was followed by a major crash. If we take that 2011 blow-off and crash as a template and overlay the bar pattern from that period onto the current silver chart, we get a scenario where silver could be trading in a wide range between about $48 and $80 in August 2026. Now, combine that with the earlier assumption. If the ETH to silver ratio revisits the trend line and hits around 98 at that time, and if silver is in that $48 to $80 range, then, at the lower silver estimate, around $48, an ETH to silver ratio of 98 would imply an ETH price of roughly $4.7 thousand. At the higher silver estimate, around $80, the same ratio would imply an ETH price of roughly $7.8 thousand. So under these layered assumptions, macro bottom in the ratio, silver putting in a blow-off top and then following a similar crash pattern to 2011, and ETH to silver revisiting the trend line around 98, you get a potential ETH price range of roughly 4.7K to 7.8K by that point. Again, none of this is guaranteed, but it offers a structured, historically anchored way to think about potential outcomes. Let's step back and look at the bigger takeaway. I've made a lot of assumptions in this analysis, and I want to acknowledge that clearly. The most important assumption is that ETH to silver has already found its macro bottom. Why even consider that as a reasonable assumption? Because we're seeing an extreme divergence. Silver is at one of the most overbought points in its history, while Ethereum, in terms of this ETH to silver ratio, is at one of the most oversold points in its history. That combination, extreme strength in silver and extreme weakness in ETH relative to silver, is exactly the kind of setup that often precedes major mean reversion moves. Now here's the big reveal. Historically, when the ETH to silver ratio bottoms with an RSI reading under 30 on the weekly time frame, that has usually coincided with ETH being near or at a bottom against the US dollar as well. In other words, a capitulation low in the ETH to silver pair tends to line up with a broader bottom for ETH itself. So if you haven't sold your ETH at the previous tops, it might be unwise to capitulate and sell into what looks, based on this framework, like a promising bottoming region. Again, not financial advice, but from a risk-reward perspective, this is not the type of area where you typically want to panic sell. So far, we've been talking about the weekly chart, the big picture. But trends don't just flip on a weekly chart out of nowhere. As the saying goes, market trends often shift first on the lower time frame and then propagate to the higher time frame. That's why I also looked at the ETH versus silver chart on the daily time frame. On the daily chart, it's not difficult to see that the structure is beginning to change. Instead of making lower lows and lower highs, ETH versus silver is starting to form a pattern of higher lows and higher highs. That's one of the most basic and powerful signs of a potential trend reversal. In simple terms, buyers are stepping in earlier than before, and rallies are reaching higher than previous ones. That's usually how downtrends transition into sideways ranges and then into uptrends. There's also a key level I'm watching on the daily chart, the 32.3 area on the ETH to silver ratio. If the pair can manage a daily close above 32.3, that would further strengthen the case that ETH has bottomed against silver. It would confirm that the emerging higher low, higher high structure is not just a short-lived bounce, but the start of a more durable shift. On the other hand, 21 would be an important support level for the ETH to silver ratio. If that support breaks, we could see the ratio going into deeper correction. So, in practice, the daily chart gives us an earlier confirmation signal, while the weekly chart defines the macro context and potential upside if this really is a major bottom. To wrap this up, here's the core idea. We're looking at a rare fifth occurrence of the weekly RSI for ETH to silver dropping below 30, which has historically lined up with major bottoms and long periods of ETH outperformance versus silver. The macro structure since the November 2021 top has been a clear downtrend, with a key support at 49 finally breaking in December 2025, a classic capitulation signal. If this is a macro bottom in the ratio, and if silver has just put in a blow-off top similar to 2011, then a reasonable scenario has ETH retesting the ETH to silver trend line around a ratio of 98, which could translate to roughly 4.7K to 7.8K per ETH, depending on where silver trades in that $48 to $80 range. Historically, bottoms in the ETH to silver ratio with RSI under 30 have also lined up with ETH being near or at its USD bottom, which makes this region especially interesting for long-term investors. And on the lower time frame, the daily chart is starting to confirm early signs of a trend reversal with a higher low and higher high structure, with 32.3 and 21 as key resistance and support levels to watch for a daily close. If you found this breakdown useful, let me know in the comments whether you'd like to see more of such analyses. Thanks for watching, stay safe out there, and I'll see you in the next one.